Hey everybody, welcome to the Bullish Rippers YouTube channel. We post all the recordings of the Rippers Twitter Spaces to this page. So, if you ever miss a Twitter Spaces, this is the place to come and check. Make sure you're subscribed and hit that like button if you enjoy.
All right. Evan, have we had any other news that's come up today that has been going on since this morning's space?
Yes, sir. There's been a couple stories, and honestly, I may even recap one or two of the stories from this morning as well. I think we might have some different people and could get some good context to it. The first one I'm looking at, this I actually did look into it, and there were some rumors of this. It's not the first time this has come up, but Netflix apparently paid Kanye and Cudi or whoever it was $30 million for the three-part Kanye documentary. So that was interesting. I hadn't really seen that before. I did a quick Google search into it. This was not the first time it was being said. But I still did think it was pretty interesting. Adobe, they said they're going to be reporting their Q1 earnings a little bit away, but not too far, after the markets closed on Tuesday, March 22nd. So I know we are right now towards the end of the earnings cycle for this one, this session, but hopefully gives us a little hope for that next earnings cycle. I'm looking at DraftKings. They're apparently partnering with digital asset startup Zero Hash to become a Polygon validator. Now, I have no idea what that means. God, that feels a little bit more up your alley. Maybe you know what's happening there, but something with DraftKings and crypto. Amazon announced today they agreed to acquire a company called Veeco, Veeqo. It's a company that makes tools to help online businesses manage their storefronts on and off of Amazon. That's according to CNBC. And then I also saw Comcast and Apple. They announced the launch of Apple TV Plus across Comcast entertainment platforms in the U.S. So that happened today. I always find it weird when certain services, Apple TV Plus or whatever it is, isn't on a device like Chromecast or Roku or whatever it is. But that is Apple and Comcast coming together. Small history thing, and then I'll throw it back to you. I'll do small history, and then I'll do one major story that we went over this morning, and I'll give it back to you. But on this day in 1876, Alexander Graham Bell received a patent for his invention, the telephone. So as we're all speaking from our cell phones right now, it's a interesting history for that today. And then just one quick news story, which I thought was pretty big from this morning. Intel announced that Mobileye submitted a S1 to the SEC, indicating its intentions to go public through an IPO. So that was another story from today. And you'll see we got a bunch more of our speakers today. Shout out to all of them, extremely smart people as they're speaking. And and as they're saying amazing things, make sure you check them out, check out their profiles, hit that follow button. It's really easy. And I'll give it back to you, Gav, and let you get us moving.
Yeah, sounds good, man. Let's definitely keep it popping off that. Sarge, hope everything's going good. Good to have you back on Spaces. What's been going on? How have you been approaching this market?
Hey guys, how's everybody doing? I tell you what, it's been an exciting day. I mean, it's been a tough day because I'm long some Disney, but man, it's been an exciting day. I had a great trade right off the bat. I shorted BBBY this morning before the opening, and that has sort of eased some of the pain from the Disney trade. But outside of that, my three pillars, of trading this market have been defense names, energy names, and material names. The defense names are still going. I mean, I had Lockheed take down another target price. This name has knocked down two target prices in less than a week for me. Northrop is about $5 away from taking down a target price. Kratos is on the move, and Raytheon not so much, but Raytheon is who makes the Stinger missile, so I think that one's got to start moving. Those names have been spectacular. Oil, although oil itself has been up for most of the day, the oil names are mostly giving it back today. My Hess, my Apache, my CIVI, they're all giving a little bit back today. Chevron's moving in the right direction. That's the one for me that is moving the right way. As for the materials, my salt miner, which is CMP, this thing is actually doing well. This is Compass Minerals International. I don't know. I know it's not a good company. They missed earnings. They missed revs. Their 2023 looks like it might be a little bit better than their 2022, but for some reason the market is buying this thing, and I caught the wave, so I'm sticking with it. I got out of my copper names, which when I'm in copper, it's SCCO, which is Southern Copper, and Freeport, which is FCX. They're moving the wrong way. I'm still in the LTHM, which is the lithium name Levant. That one's going the wrong way right now. But the three ETFs that I hang on to in this space, which is GLD, SLV, and the gold miners, which is GDX, those three have been pretty good to me. So it's a real mixed bag. Disney's been tough. I've had to trade Disney as a day trader today around my core position, and I'm kind of getting my tail kicked in that one. But around it, it's been really mixed. It's been active. Like I said, it's been exciting.
Love it. Great stuff around there, Sarge. A couple, obviously right now, oil going a little bit crazy. Short squeezes out the wazoo, with BBBY today and everything going on there. How are you, implementing proper risk management in this type of market?
Well, like I said, one thing I'm doing is day trading. I've been day trading a little bit, which that keeps the risk to a minimum, but as long as you're disciplined. But where at Disney, where I have a core position, what I've been doing is selling calls against my long, so at least the calls go down in value as the stock has been going down. And I've been rolling over the calls ahead of expirations when they become close to worthless and I can't wring that much more value out of them. I'll drop down and I'll cover that, and then I'll drop down and sell a lower priced call that will expire either this Friday or next Friday. So I've been able to generate a little bit of revenue on the way down to counter that, but not to cover the whole thing. Obviously, Disney's my pick of the year this year, and it has not been kind yet. So I have to kind of stick with it just because I told the people I would, and it looks like it's going to be a battle, maybe a full year battle.
Yeah, Disney's definitely not really been cruising since it did have that nice spike on earnings, right?
Yeah, that night it went to like what to 160 and like in the post hours, and the next day it gave it all back. So if you didn't have the inkling to sell it on a PM spike that day, and I didn't, that's that was about your one chance to get out of this with a nice gain. Since then it's been tough, and I guess this is still, well, part of it's a reaction to travel, and all those stocks are kind of taking it in the schnoz right now. But Disney is part of this is probably in reaction to them admitting that they're going to have to go to a commercial based model for the Disney Plus streaming service, to advertising, which I don't think they wanted to do originally. So it looks like it's kind of a defeat for management, where in a space where they have placed so much and where the market had placed so much value.
Got it. Yep, that makes sense. Appreciate you being in here, Sarge, and tuning in
Sure.
with us. I want to bounce right off that to Catherine. Would love to hear about, the news that you've been covering, what you've been focused on.
So I'm going to be honest. Right now, I am very heads down. Well, I only have one head, so I'm very head down focused on an interview that I have later this week with ZipRecruiter CEO, and then I've also got a commodities interview for Action Alerts Plus. When I'm not normally, I don't normally cover commodities, so I've been very focused on learning everything I can about what's going on with jobs and also what's going on with commodities. So outside of those two fun little tidbits, obviously I am watching oil prices. The high, I believe, back in 08 was over $140 a barrel. So the fact that we touched $130 is definitely something that I've been covering extensively over on Action Alerts Plus. And then we've got the VIX elevated, we've got the CNN Fear and Greed Index, which, depending on who you ask, is something to watch. But we're still seeing extreme fear with that index. And I think, Evan, you mentioned DraftKings. That was actually on the stocks that I'm watching list because it's down 69% over the past year. It's kind of gotten a fall from grace. And then, of course, the Bed Bath & Beyond.
Yeah, what's your thoughts on that Bed Bath & Beyond move?
I mean, I think that the stock action itself is extreme, but the fact that Ryan Cohen's letters basically pushed for changes, which I think anybody could have said that Bed Bath & Beyond needed to alter their strategy here, but also said that if they can't implement these kinds of changes, it might be time to look for a buyer to take private. I think that could really not really shake up the space because they've fallen so far behind, but it would definitely make for some really interesting headlines and what's next for Bed Bath, and that story would be pushed forward.
Okay, yeah, that definitely makes sense. And then on the other side of things, with the situation in Russia and Ukraine and kind of how that's been affecting the market, any updates on that end as to how you see it working into things?
I think we're going to remain volatile, and there's still going to be a lot of anxiety this week. You know, there's from the conversations I've had, it seems like some on Wall Street are just ready to ride the tide here. They've kind of given in to the fact that there's just not really it's it's going to remain volatile until we get some semblance of security, and no one's quite sure, and I'm not even going to try to pretend that I understand it. No one's quite sure where we're going to see that.
Okay, keeping our eye out. Catherine, great having you on here. If
Thanks for
at any
having
point
me.
you want to chime in, just throw up that hand. Awesome. Okay, Brad, what's going on, man?
Not too much, just another really, really fun day in the markets for us long-term growth investors. But in terms of activity today, pretty boring day for me. Still sitting right around 8.5% cash as I was at the end of last week, and haven't really done anything to note. Oh, actually, I'm sorry. I talked about this in a previous space, but I did sell SMH and replace that equity with SOXX, which is just another semiconductor ETF. So not really a big change in sector allocation or percentage allocation to semiconductors, but SMH's largest holding, as a lot of you probably know, is Taiwan Semi. So just kind of offloading a little bit of geopolitical risk there, while I could before hopefully things don't escalate there, but just removing some of the risk there. Now TSM is a big part of this entire ecosystem and this entire supply chain. So I'm obviously not offloading all of the geopolitical risk, but just by limiting the direct equity exposure to that specific name makes me just a little bit more comfortable. So that was the only move I made. So not super notable in terms of changing ownership structure or anything. Just switching ETFs and keeping the exact same allocation for the semiconductor industry.
So, Brad, one of the ones that I wanted to throw at you there is, well, it's not semiconductor, but SoFi, continuing to just show, to me, worrisome price action. I know you made that case for them. May just want to get, more thoughts, down 20% on the week, and obviously at short term, 40% on the 3 months. But even if you zoom out all time now, down about 12.5% from IPO. Obviously price action's a little bit all over the place. I'm curious with, I know your case for SoFi. I'm wondering what the time horizon is on that, and if there's specific metrics or milestones you want to see happen.
Yeah, everything that I really want to see happen from SoFi is happening. The inflection to positive EBITDA in 2021, all their KPIs accelerating, and all their demand key performance indicators accelerating. So I would respond with I challenge you to find a growth stock that's not net income profitable, that doesn't have a chart that currently looks like that, and that looks very, very strong. So I mean, when I'm buying a company and buying a position in SoFi and saying things nice about it 2 weeks ago, I mean, I say this over and over and over again. I'm not timing bottoms. I'm not trying to comment on bottoms or express an opinion on where they may be. I am simply taking advantage of more compelling forward multiples and more compelling risk reward, knowing that if revenue and cash flow compounding continues at a brisk clip, like every single sign for SoFi points to it continuing to do, that will matter in the end. Not what a chart looks like today, not how ugly the technicals look. That will be irrelevant in the long term over the years to come if SoFi does what they're continuing to do and execute from a fundamental perspective. So in terms of when that happens, I don't know. I'm not saying we're at a bottom here either, because I wasn't saying we were 2 weeks ago. I'm not saying we are now. That's not an opinion I ever want to express. All I'm paying attention to is the fact that SoFi's unit economics are improving. Its incremental adjusted EBITDA margin is at 30% versus just a barely break-even EBITDA right now. Its member and product growth continues to accelerate. Some people pointed to member growth as a caveat, saying that's cumulative over time, but product growth is not, which is very real and aggressively accelerating. So in terms of how the company is actually performing, they're doing everything I need them to do and more, raising guidance amid the student loan moratorium being extended for 7 more months, which is by far their largest and by far their most profitable segment. So really, just to kind of throw it back at you, no concern whatsoever, and not no concern with the stock price and saying, yeah, we're turning around from here, but no concern whatsoever with how Anthony Noto and the team at SoFi are actually doing. And in 2 weeks, if the stock price is down another 5% or 10% and no fundamental news has changed, and you ask me that question, I will have the exact same answer for you.
Yeah, definitely interesting with that moratorium. And okay, I'll bring it back around, but I see the other person who we brought up on the panel. Saw a few people that I know follow you. Car dealership guy, what's going on?
I'm no FinTwit expert, but I'm a used car dealer. We have a dealer group, and I see things on the ground floor. So, I've had some good insight into what's going to happen, and typically translates to the public markets. And so, the biggest thing that we're seeing is just the last couple of days at the used car auctions. We attend the biggest auction in the world, which is it's called Manheim, Pennsylvania. It's every Friday. And then there's many more auctions that we're going to be attending this week. But we're seeing that EVs are obviously super, super hot, but just disproportionate to what we've seen in the past, and to even what's happening with gas prices. And so Tesla specifically, I mean, you can't touch them right now at the auction. So I would expect that the prices for them are going to moon, and in the used car market specifically. And then I was also saying that if we go back to 08, 09, and we see what happened with just around that time with gas prices and how it impacted cars and depreciation, the cars that took the biggest hit were the gas guzzlers and the V8s, right? Makes sense. But nonetheless, I think that, the OEMs that really, have a large part of their business comes from these bigger trucks, or, that's a bigger part of their market share. I think they're very susceptible to this, and it's a big risk. And so I think time will tell how this is going to really impact, the OEMs, the used car market and whatnot. But just, seeing this immediate just influx and what's happening with Tesla and on the rest of the EVs on the market at the used car auctions, it seems like, dealers are really stocking up hard for EVs in anticipation that people are going to be flocking to EVs at an increasing clip.
Very interesting. Yeah, I see the market. Tesla's one of the last long-term additions that I added to when it had that big dip down maybe like a week ago. So definitely keeping my eye on that. And absolutely, there's plenty to keep an eye on with the used car market, with other moves. I saw, obviously they talked about in the even State of the Union how those prices continue to move up. And certainly there's ways to get exposure. I think anybody that caught the run up in cars or Hertz or some of those other stocks that had like parabolic movement for a while saw it coming. And now maybe it shifts over to EVs, especially as these oil prices continue to move. Thanks for joining up and sharing that. Okay, Big O, what's going on? What are you looking at?
So started off the day with that big push up on BBBY, and going back in history, whenever something spikes up like that pre-market, if you go back and look and kind of see how it reacts, every time it spiked up, it ended up selling back off in the same day. So of course we short that thing as soon as the market opens up. Still holding puts on that. A lot of the stuff that's actually trending is extended. So do a big nice pullback on them. Other than that, market's selling off. Come back through huge candles. So of course the price action's clean. So looking at Lockheed Martin, Costco, looking to swing that thing if we can get another push back to the top side, so we can't reach all-time highs. There's a lot of other tickers. He was talking about Tesla, looking like spies, consolidating right in the middle of the range, right in the middle of the month, and it's starting to turn down. So we're just looking at basically taking any kind of reversals back through large candles. So Etsy, Nvidia, Tesla, Amazon's been a really nice one today. Clean move. We expect it to get on that one to the downside. But other than that, really, if you look at any candles on the month that's solid green that's come back to that range, that open of that candle is going to be your target. But
okay. So want to reiterate those tickers real quick?
Yeah. So Nvidia, beautiful green candle. Shopify, Amazon, Etsy, Roku, BA, Crowd, SC, and SQ. Huge moves. Now, SQ just filled that gap, so it does have the potential to turn right back to the top side, but it's still beat down. So you got to remember, it's still bearish until it isn't. So, upside tickers, looking at X, Costco, Lockheed Martin. Those are the ones that are still pushing up. They had a small consolidation today, which is healthy. You really want to see consolidation in the market. If you see solid green candle after solid green candle with no wicking on it, it's extended. So when you see that consolidation of the base, that's the rest before that next move up or down. But, they plus set to me is a consolidation break coming back through large candles. That big candle is like a gap. And it's like a gap because the price action is cleaning back through there. And on top of that, you're taking those stops. So the faster it moves through there, the faster you get to your target, basically. So it's just super clean, and we're seeing that a lot. So a lot of times when we come back through on the daily, you still get them large candles, but they're 2 or 3 large candles. But starting the end of last week, we're coming back to them large candles, which is beautiful. So if we'd ever get a reversal, we're gonna get a large reversal back to the top side too. But it's not gonna be as clean as it is right now. So now's the time to look for those candles and hop in.
With Nvidia, it looks kind of bearish here, like it's breaking down a little bit to me. Especially if it goes below this 206, 207-ish range, breaks through those, lows from January 24th and then February 24th. Any thoughts on that?
Yeah, absolutely. So let me pull it up on the day real quick. Yeah, if you notice on the day, it's coming back to that large green candle. The target's going to be 210 on that thing. And, of course, you want to take profits before it gets to that thing. You really want to sell in the strength. You want to beat the crowd when they start selling. You want to be out where you can catch the top side of that ask on them options. I could see it bouncing off that level. Now, if we're going to, of course, that's a target. So from that point, we want to kind of hold back on it and see what it's going to do. Either it's going to expand the range and continue back to the top side, or it's going to push through that pivot, and then we're going to retest the downside. At that point, we'll re-enter and reassess the situation. But when they get close to my pivots, man, that's you taking profits because price is going to react to that pivot. And if you look at Amazon Shop, they all got that same exact setup. Coming back to that large candle, you want big moves in the market, look for that setup. Consolidation, break back through large candles. It works great on the daily, but it's the same pattern on the 5-minute, 15, 30, 60. Same setup. It's beautiful, clean price action.
Awesome. Appreciate you being up here and sharing.
You're welcome, sir. Appreciate you.
Absolutely. Okay, real quick, we are about halfway through this. If anybody is in the audience and has already checked this out, so my name is Gav Blacksburg, and I run the Wolf account, which you can see up here co-hosting. Twice a week, I have the honor of doing a space from the Bullish Rippers account. So this week I'm doing this Power Hour space, which we do every single week, and then also a Wednesday evening market analysis space with Jay Woods and Brian Shannon and Joe Fahmy. So that'll be a really, really good one with some OGs on there. But if anybody hasn't already checked this out, I do spaces from this account, Stock Market News. My co-host also does spaces from this account. He also does a bunch of tweets from this account. So I would recommend taking a look at what's going on in this Bullish Rippers account. We're trying our best to get this one to 20K ASAP. We're almost there. We're going to do a nice little giveaway at 20K to one of the followers or maybe a couple of followers. We'll see what happens. So if you haven't already, this is a great place to check out for both financial and educational tweets and information like that, but also plenty of spaces as well. All right, we got a couple other people that came on up. Man of the Hour, TSDR. What's been going on today?
Hey, how's it going? Not much. I haven't done really much of anything since the early morning. Quite frankly, could have taken a nice shred for the past, 45 minutes to the downside. But my day was focused again on the typical stocks I like to play with significant volatility. Nvidia has moved $16 today. I was in some put options this morning. I was also in AMD put options this morning as well. This first hour and a half of AMD's chart is just absolutely beautiful. Just a phenomenal trender down the 9 EMA on the 5-minute chart. Since then has chopped around, and we're getting we got that sideways consolidation pretty much from 11:30 market time till about 2 o'clock market time, and we're starting to trend again to the downside. I missed that one this afternoon, but I wasn't really interested in trading. I did my taxes this afternoon, so I. Anyways, what else is going on? I mean, it's pretty nasty out there. Last night, I mean, when the futures were down about 2% on the Nasdaq futures, I was really hoping they'd recover so we could get some range. Today, and that's exactly what we got. We recovered. We opened up pretty much flat pre-market, which is more than ideal in a downtrend like this, to where we recover and open up flat. I would have preferred not being down 2% pre-market and just opening up flat or even slightly green and being able to fade that. But Luckily, that pre-market recovery gave us the range we needed to trade today. Where is if we would have opened up 2%, I imagine opened up down 2%. I imagine we'd still be at a very similar place with just more choppy action intraday. Yeah, I've just been exploiting the range and the stocks that I typically like to play. Using the opening range breakout on NVIDIA on the 5-minute chart, AMD, same thing. I did take a long position in ENPH this morning. I was in it for about half an hour or so. TAN, the solar ETF, was showing, still is, looking fairly decent on the daily chart. If we can get over $75, I'd say that's pretty solid. Really, $74 to be honest. That'd be pretty solid move, likely up to the 200-day moving average around 81, and it would send some of these solar stocks with it: ENPH, Run, SPWR, SEDG, so on and so forth. But no, that's about all I've got. Pretty crazy trend day. This is the stuff that I live for, man. Yeah.
Cool, man. Awesome stuff. Appreciate you sharing that. Yeah, this market's a little bit wild and wacky right here. Shout out, Sarge probably made the best move here, selling some calls in the morning. That was definitely the best way to go about it. My portfolio is only being propped up by, honestly, I took some gambles on some penny stocks. So they've been having a decent market with strength, even through some of this roughness that's going on here. But still a tough day in the market, and seems to be going a little bit lower here. All right, let me go ahead and throw this on over to. I saw somebody else came up beforehand. Maybe they dropped down again. Huh. All right, Danny was here. That's what it was. I don't see him anymore. Okay, so we made our way through everybody real quick through the first half.
Not
Matt,
me.
what's going on? Sorry.
Yeah. Just chiming in with a couple things. And by the way, TSTR, congrats on 10,000. Well deserved, sir. Very, very hardworking guy. Yeah, I was going through I posted 2 things up in the top of the space, post 1 and 2, just showing where the market is. And it's kind of in I guess, like a liquidity hole right now. There's not really an easy path to find buyers. All of our calculations don't really show any kind of support coming up. I think that this second wave down is starting to really show the abandonment of the bullish support we've been seeing in the futures market. Net selling week over week of S&P futures contracts on the front month. The total in the front month this month is probably the worst of all the months since last July. So we've been seeing a net selling, like a lesser net long position over the last 7 months. And the market was sustaining pretty okay because there was enough shorts covering to keep it from selling off. But now with the kind of the geopolitical events have created almost an atmosphere where the selling is starting to outpace the shorts covering. And basically most of the shorts that we're trying to get out have pretty much started getting out. And I don't think we're going to start seeing a reversal until in at least, we gauge S&P futures very, the Commitment of Traders is the report I refer to. And until we start seeing shorts start trying to cover the market again, when people are covering, you don't really see. You need buyers and sellers, right, to create liquidity, which keeps markets floating. So right now we're not really seeing that, and we've had 2 days in a row. If you look at the second picture I've posted to support that, this little yellow bar that I draw is a very key level of the pressure that gamma places on monthly expiring options. And when you open below that number after you fall through it, the markets has a sentiment change. And for 2 days in a row, we've been opening below it. So the market opens into negative gamma territory, which means it really has a hard time falling. If they like a second picture I posted with the S&P, I think it was SPY, it touched it and then fell. It did it 2 days in a row. So I think we are going to lower lows for the year from here. There's no sign of any kind of support. And I think that it just comes down to the market is not happy right now. And this is probably the day that I've decided that it's probably going to go lower. I was still hopeful for a couple days this week and a couple days 2 weeks ago, but like all unless something happens, which I can't even guess what it would be. There's not any signs that anything's going to turn around. So Sarge selling calls, I think it's a beautiful trade to make, because you're non-volatile, which is interesting as well. The volatility, I say non-volatile, but the volatility is going up little by little, but it's not creating an event on volatility where you would have your premiums affected by the IV. The market's just slowly non-volatile straight selling. So it means it's expected, and people don't not expect it to sell. It's not a surprise sell. So with that, it's a nice easy coast. I think selling out of the money calls is probably one of the better ways to trade this market. And in reality, I'm mostly sitting out, letting the market fall, because I'd rather short for it when it's volatile. So when it's non-volatile and selling, I don't like to take a short, because in that particular sense, or like directly short something like buying puts, because I don't want to deal with that potential, I guess, and decisiveness that it may not sell, right? It may just sit still. But I do think that we're going to experience a very short-term lack of liquidity in equities markets. There's a lot of interest going into treasuries. There's a lot of interest going into a lot of these commodities. There's money flowing into things that are going to be stable for a while and fight inflation, like inflated oil prices. It's going to be good for a while, I think. I don't know how high it'll rally or stay up there, but we talked about that this morning, and that oil might stay elevated for a while. And you're going to see a lot of money piling into those type of opportunities, just because anything has to fight inflation at this point. So S&P doesn't look good. Nasdaq looks even worse. I was watching the FANGs today. 2810 was a key level in Amazon, and once that broke, it was just one thing after another. Facebook fell, and it was just that's what I wanted to see hold, because Nasdaq opened so bad this morning, and with that, I guess Facebook finally found lower lows. Right, that's kind of the model that I'm looking for the Nasdaq and the S&P to have, where Facebook has fallen to yearly lows. It looks like Amazon, I believe, as well, has gone to almost yearly lows, and it's just another leg down. I mean, I could see stocks like Amazon falling to 25, 23. I'm finding liquidity very, very, very low. Facebook at 150. It doesn't look good, guys. It does not look good. And that's just all I got to say for now. So,
yeah, it's definitely continuing that lower low trend. And that's pretty unfortunate. I know that you were looking for that bounce back and remaining bullish for a while there, but unfortunately seems to be moving differently. What do you think about all these kind of like penny stocks and small caps that are catching a bid in this environment at the same time?
it's the same thing. It's the lack of liquidity. What you're seeing is that they're already illiquid, and so people are looking for any kind of opportunity. Thinner markets move faster when they look for buyers and sellers, and short squeezes come from people abandoning position, right? Whether they're short squeezing, or like right now, what we were seeing all year, were longs getting squeezed while the market was pulling back a little bit. You're just seeing an extra, I guess, boost of lack of I guess, buffering inside the market, because there's not really a lot of participants. And so things are going to move much, much, much faster. And that just comes from lack of liquidity. Liquidity kind of buffers price move. But if you don't have buyers or sellers, especially if you have the low cap stocks, it's right now anything is better than inflation, right? So your money sitting in cash is just like a bucket with a hole in it. So any opportunity is a place for people to put money in, and it's going to be frantic. And with people having infinite things to choose from and not really a solid direction, people are going to disagree on where to put their money on. What's the best opportunity? Which means people aren't flooding into FANGs at the same time, not flooding in energy at the same time. People are going to jump from wheat, or jump to oil, to jump to penny stock, to jump to the Russell. It's going to be, because it's spotty like that, you're not getting consistent money flowing into one industry or to one sector or to one type of asset class or vehicle. You're really going to see that spotty movement, just because there's no ask or bid buffering from a supply of buyers and sellers. People are kind of removing money very rapidly from like the common trending stocks that they've been putting money into for the last 3 years, so or since COVID. So I think that's just it. It's just a lack of liquidity thing, and the Fed's no longer providing that steady liquidity to the market. So just in general, people are scared to be on both sides, and we see that in the S&P. Again, committed traders is showing both sides are abandoning their positions. Shorts have been getting out, longs are getting out. People are kind of not participating as much as they used to, so not accumulating positions. So that will cause activity like that, and just about anything.
Got it. Yep, makes sense. Okay, Evan, I want to bring you back into this. First off, not sure if you saw it, but we were kind of touching on DraftKings before, and just got breaking news that Calvin Ridley has been suspended the entire 2022 season for betting on games. Pretty interesting to see that. So maybe we'll see where sports betting goes and if they kind of allow athletes to be involved at all. Are there any specific topics you wanted to touch on now that we've kind of gone around? Stock market news?
Hey, sorry, I'm literally in the
Okay.
terrible area for this, so
All good.
I'll let you go
Okay.
on to it. I did not know it was for betting on games, so that's crazy. But I'll spare the background noise and go back on mute.
Okay, no worries. All right, so I want to continue to look for opportunities going into tomorrow, see if there's certain setups that have come up, anything in that realm. So first off, Catherine, I want to kind of go to you because I know you'll touch on more general macro going into tomorrow, and then I'll go to the other four speakers, and would just love to get some plays from everybody. Now that we have 20 minutes left, just some setups. Catherine, any thoughts kind of on the conversation that we've had where we talked about everything from used cars to small caps to a whole bunch of other stuff? Anything you want to add on to that? And then we'll go to the other guys for some stock plays.
Yeah, so since I'm a journalist, I can't, just so everyone knows, I can't give any stock advice or anything like that. I just report on the markets. But based off of the conversation that you guys are having, I've spent most of this conversation just keeping my eye on wheat. I'm going to say this wrong, and I'm even interviewing them later this week, so I apologize. But Tukrium wheat fund, which is now at trading above $12 and about 50 cents. Which is right below its 52-week high. So I'm still, like I said at the beginning, still very, very focused on commodities and ZipRecruiter. And I think it'll remain that way into tomorrow. But with the overall market action, I'll be kind of seeing if whether or not we keep seeing the Nasdaq dip this low. I mean, down 3%, and the Dow's only down about 2%. I mean, it's interesting to see tech sell off so much today.
Yeah, it is pretty interesting. Especially when Mondays have been, relatively strong the last few weeks, and then just seeing a huge tech sell off. I mean, I'm looking at FinViz, and I'm going to post this out because it's just blood straight in the water. Amazon down 5%, not something that you see too often. Tesla down 3%. Only really seeing energy as well as a little bit of healthcare rebounding. Are there any other, news or stories that could be factoring in that you see?
For the overall market, I don't think so. I think that this is just, I think Matt put this really, really well where, the market is just really struggling right now. And I'm not going to even try to speculate here. I just don't see any stories that could really change it. But to your point, and this is something that you and I and Evan post a lot, the FinViz charts, and I encourage everyone to go check them out because it is fascinating to see, especially today. I mean, it's frightening if you're heavily invested in the markets, but it's interesting to see exactly where there are spots of green. Like in healthcare, J&J is up 2%, while you see Pfizer and AbbVie down lower, and tech is a bloodbath, but you can still see that there are still some Palantir's up about 3%. So it's interesting to see where there are opportunities, and also just get an overall view of what part of the market is lower.
Yeah, it is nice to get like an overall view there. And yeah, Palantir, I was looking at cybersecurity with a few other people this morning. We definitely are bullish on that area. We did see Crowd kind of try to rebound and then came all the way back down. They do have earnings this week, something to keep on the radar as well. But yeah, all good points all around. Appreciate you, being on, Catherine. Anything else you want to add on there?
Nope, I think we covered it all. Thank you guys for having me. I always appreciate it.
Yeah, definitely a pleasure. And everyone should check out what Catherine's doing. She does some great stuff on Twitter, but she has tons of really awesome content on multiple other platforms. Obviously, The Street, Action Alerts Plus, multiple spots, Coffee with Catherine, and so much more. So pleasure having you on. You bring a lot of professionalism and, a lot of content to these spaces. And we always enjoy the spaces with The Street at 3 p.m. on Wednesday. So if anyone's not following Catherine, make sure to click in there and check her out. All right. Let's keep it rolling. Going to go around to our other four panelists and just ask everybody for a few stock plays and setups that you're liking here as we go into tomorrow. Let's go over to Sarge first.
All right. I don't know if I like anything right this minute, but I am looking at Wells Fargo as a possible purchase tonight or tomorrow morning. They lost the 200-day on Friday. There's a technical reaction to it today. It's selling off a little harder than most of the banks today. All the banks, I think, are a little bit oversold at this point. I do think that interest rates are probably going to start moving the other way. So a traditional banker like Wells Fargo is probably better set up for that than the other banks that rely on trading, that rely on investment banking to provide revenue. Wells Fargo is just a traditional banker with a poor reputation. And over the course of a year, they've actually outperformed a lot of the other banks in percentage terms. But here, I think they're oversold. I think they're probably, if any of the banks are going to bounce or rebound sooner than other banks, I think it would be a traditional banker, someone whose business is not complicated. And for that reason, I'm looking at Wells Fargo. And probably, what are they down right now? They're down almost 6%. They're having a really tough day. So I may pick something up tonight.
Okay. You want to throw out those tickers real quick for the audience?
Wells Fargo is WFC, William Frank Charlie.
Perfect. Awesome. All right. Keeping an eye on Wells Fargo. Thank you, Sarge. All right. TSDR, are you ready, buddy? All right. I'm assuming kids are on hand right now in the room. Okay. Big O, any plays from yourself, setups that you are liking, specific tickers? I know you mentioned NVIDIA.
Yeah, absolutely. So, Amazon's been pushing down, still expecting it to go to that $2,700 level. If we can break today's low, we'll look at swinging that thing overnight. Of course, everything after that big push down today needs some kind of consolidation right here at the end of the day. Of course, SPY, here's what I think's going to happen. I think we're going to see stuff start to push up pre-market. So we had a big sell-off today. Depends what we do in the last few minutes here. But SPY it likes to gap up Tuesday morning. You ever heard of turnaround Tuesday? It's like a real phenomenon. So the market could push up tomorrow just to continue to sell off. Everything's just real beat down. So I could see Tesla selling back down. Of course, if it does, first it'll be 794, then 700. I still like X. X Consolidated been pushing up the last few days. If it can get over $31.20 a day, I'll look at taking some calls overnight. Charter's looking really interesting too. So I may end up getting a few puts on that before close. It's got room under 556, and then of course SPY is sitting right on top of a major support level right now. And that's one reason I think we could see it push up pre-market. That don't mean that it's going to continue to run. I just think that we see a gap up in the morning. So look at it. A lot of times what they like to do before they push up in the morning time, they like to sell off at the end of the day. And that's just to kind of shake out weak hands. So, but other than that, I personally don't care much about news and stuff like that. I just like what the charts tell me, right? I'm just a price action trader. I use the pivot studies. All my trades come from consolidation breaks, either the high or the low. I don't care which way they go. I have no bias whatsoever. And that's really all I can say. I don't use VWAP, EMAs, MACDs, any of that stuff. Just candles, just what the candles tell me. That's all I care about. I've been pretty successful with it too. The candles don't lie, and the volume's only leading indicator. So that's just really all there is to it. Of course, there's so many different kinds of traders. A lot of people play news. A lot of people play earning run-up. And there's just so many different styles of trading. You know what I'm saying? Of course, you're doing, if you're a position holder, a long-term holder, something like that, of course, you want fundamentals and stuff like that 100%. But, day trading, scalping, swinging something for less than a week or so, price action, I think is king. Of course, I'm biased toward price action, but I'm not biased toward direction. So that's about it. I guess that's.
So Big O, what are you looking for in NVIDIA exactly?
NVIDIA's sitting right on top of a support level. I'm looking for a push down on it.
So you're looking for this door to open. That's what this 208, 210 door with the volume.
Yeah, so let me pull it up right quick. I'll tell you exactly. So NVIDIA, its target is still 208.87. It's really close. I posted a picture of it on my Twitter. But if you look at it, it breaks that consolidation under that low candle at 230.50. From there, it's just straight down. Now, when it gets close to that pivot, it can do a couple of different things. It's either going to bounce and we're going to shoot back to the top, or we're going to break below and we're going to retest that pivot back to the downside. So if it breaks below the pivot, we can see 198. So if you look at Amazon on the daily, it's the same exact setup. There's a bunch doing the same exact thing. If you look at Amazon daily, it's coming back through that large candle, and it triggered at 29.88. Target was 2,800. Next target is 2,700. So that's a $200 move. You know what I'm saying? In less than 2 days.
Yeah, look at that 3 days on Amazon. That is a horrific 3 days.
Yeah.
Oh my
And
goodness.
I knew exactly when it was going to move. And if you want confirmation, all you need is a retest on a 5 minute to the downside. Now, the longer price consolidates, the bigger the break. And the reason that's important is because that support is a major support. That's where longs are putting their stops. So when it breaks that level, not only does it run them stops instantly, you get a tight stop because that support should now act as resistance on the retest. So if you want to be safe, you put your stop 30 cents above that to allow for price expansion. And then when she breaks power candles low, she's short. And the first thing we do is we target 50% of that large candle. And then the open, then the low, and then the pivot. So, but when it gets close to pivot, you got to take profits on it, especially if it's a wide spread. If it's something like Tesla, SPY AMD, you just put a hard stop on there in hopes that breaks the pivot and continues lower. But that pivot is a magnet, so price can definitely bounce. So
Very, very interesting. I like where are you from, Big O?
I'm from Tennessee.
Oh, you sound just like my cousin who's from Irving, Texas. I was just
Oh yeah, they were close.
Yeah, so I was just wondering if you were near him.
Yeah, so shop, same thing. And the price moves quicker and quicker. And the reason that happens is because, first, the price action's clean. There's nothing to stop it. There's no chop. There's no support resistance. Of course, there is on lower, but it doesn't matter. And then it's running all those stops on the way down. So the faster the stops are in, the faster price action moves down. It's crazy. I'm excited, man, because these A+ setups only come by every so often, so you got to take advantage of them. And I mean, you're talking about in 2 or 3 days you make enough for a year. It's insane.
Sarge, any other questions on that?
No, I think he got me there. I was looking at the NVIDIA that he was looking at, but I was looking at it a little bit differently. But I mean, I do see what he's talking about, and
It's beautiful, man.
that is very interesting. I actually got out of my Amazon a few days ago, fortunately.
Oh,
So
man.
thank goodness for that. I mean, when I heard you say Amazon's getting hot, yeah, I got nervous for a second because I forgot I had gotten out of it.
Yeah. And the thing too is, say you're long in something. If it breaks the pivots, and I'll be glad to share the pivots if anybody wants them, they're special. They're special. There's not another pivot like it on the planet. I'll give it away. So if you're long and that price breaks that pivot and retests it to the downside, cut it because it's not coming back up anytime soon. And I use it. It's like my line in the sand, but I can use it for entries as well. So if you want a safe entry, break retest down, come back through large candles. It's some money. It's money. There's no influence. There's no outside influence. Like to me, pre-market, don't care. Watch list, don't care. I use a flex grid, so I'm watching 40 tickers any given second. There's always something to trade. And I know there's several different strategies. I'm not knocking anybody's strategy whatsoever. They're all beautiful and they're all wonderful. And at the end of the day, we're all trading the same thing, and that's breakouts and reversals, right? We all of us see the same exact stuff. We're just using different ways and tools to get there. So I guarantee you, when we're talking, we all know what each other's talking about. We just use different methods to get there. It's crazy.
Absolutely. All right, Matt, I want to make sure you have time before market close.
Oh, yes, sir. I think that really the biggest short plays that I'm looking at, and I really am looking at, though I mentioned them earlier, but I think that Microsoft, Facebook, and Amazon, I think that those are the easiest ones to see as far as where they're going to go. I just think that the entire, I think that there's a lot of power in those moves. I think they're going to get really bad because there's just no liquidity, and I can't seem to find any good supports or resistances. I can see Microsoft going all the way down to about 250. I can see Facebook going to 150. again, we'll have to wake up every day and see if we can't find any shorts that cover to kind of reveal buyers that are sitting there. But right now, the active shorts on all these positions on a monthly scale are just really large, and people are going to, as like today was a higher volume day than like the last week in most of these stocks. People are now getting into liquidating while there are shorts sitting there. So we're getting just this negative gamma pushing everything down. And I think those are basically my plays for the next week. I wouldn't be surprised if we open up when the futures market opens and it just starts selling. That's it. And of course, in a general sense, I have a 40.72 is that next leg of what we call, there's this kind of calculation exploit that we do that looks for liquidity in futures. And what it does is it looks for an extension, I guess, in a classical sense, like a range that a move will take before it looks for buyers or sellers. So right now, the market just in a general sense, without even looking at options or those other ways that we look at liquidity, the S&P 40.72 is the next place it would even hope to find some short covering, much less long buyers. So I really do think we might be in for a couple of bad days. I mean, we could wake up tomorrow and things can be completely different. That's the interesting part about this dynamic in this world. You have to wake up and look at the market when you wake up. Having an opinion tonight, I'll wake up tomorrow and probably feel completely different if the numbers come out different or something happens overnight. So I don't think we're going to really steer too far away from the conflict that's going on in the world's effect on the markets. I think that's going to be pretty permanent for a while. I think oil is going to stay elevated. I don't think now is the time to jump into anything oil side, but I think if oil dips to, or USO, which is what I'm looking at, dips to about 77, I think that's still a good buy just for a swing play back up to the top. I think oil is going to stay elevated for a while because if the equities market's selling off, people are going to be looking for commodities just to put their money in and sit on it. The interesting about inflation, if you a trader, especially if you're new to trading, you'll realize that people, inflation, pretend that your dollar, right, has a burn on it like a cigarette and it just slowly burns away. That's inflation. And when you put your dollar in something that's selling off, it might just burn slower than the fire on the dollar. And a lesser burn is still a better investment than cash by itself. So people are going to be desperate to be putting money into things just to keep it there because they know it'll withstand this kind of short-term, or withstand the inflation that we're dealing with in the world, even these kind of short-term elevations, wheat and oil. You're going to see a lot of volume going into those because people are just going to rather put their money there than let it sit there and burn. So with a lot of liquidation in equities, I would be looking for money just parking itself in the commodities. I think that's going to be the hot ticket because there's a lot of that mentality of, okay, we missed lumber, we missed wheat, we missed oil. What's the next thing, right? Commodities are strong, and we might just see some rotations into that because money is now getting out of these major equities. And there's a lot of market cap that's about to, pull out of Nasdaq and the S&P. So, things just look bad in general for that. I guess the mega cap tech sector, I think, is really going to have it's going to be taken to the woodshed over the next week. So those are my plays: Microsoft, Amazon, and Facebook. Short.
Okay, watching the shorts. I'm not sure how recent this is. It was reported 5 minutes ago by investing.com. U.S. lawmakers strike deal to ban Russian crude and hike tariffs. Sarge, any thoughts on that?
Hang on, I was trying to do a trade here at the last minute. What'd you just go? What headline did you just catch?
Yeah, reported by investing.com 5 minutes ago. U.S. lawmakers strike deal to ban Russian crude and hike tariffs.
Okay, I think as an American and as a citizen and as a soldier, I think that's a good idea. I think those as a trader, this is probably why we got pretty weak into the bell here. I definitely think we should be banning Russian oil. I think the whole world should band together and do that. I know the Chinese won't, but the Chinese Beijing is working on, I guess, some kind of backdoor deal with Moscow. It looks like, from what their foreign minister said this morning, that they would stand by Russia, and Russia was their number one developmental ally, I guess, to paraphrase what he said. So it kind of makes me a little nervous that maybe Beijing is setting the seeds for, if we don't condemn you for what you're doing, hopefully you won't condemn us for what we do in the future. So there is potential for something awful here on both ends of the world. But I think the best thing we can do is try to hurt the Russian economy as best we can. And I guess this is we should have been out front with this, with banning their oil from the very beginning of the war, from the first day of the invasion. I know it's tougher for the Europeans to do it, but I think they should get on board as well. I think the British might. Hopefully, the mainland of Western Europe gets on board as well. And let's see where it goes from there. If you'll notice that Moscow, they kind of stepped back from their earlier demands. All right, a week ago they wanted complete capitulation on behalf of the Ukrainians. Now they're willing to settle for Ukrainian recognition of Crimea as part of the Russian Empire, those two separatist regions as independent, and a promise that Ukraine won't try to join NATO or the EU. Well, that would leave Kiev in command of the majority of Ukraine, which I thought was very interesting. Maybe that's because we're hurting their economy. Maybe that's because in most of the stand-up fights where the Russian army faces the Ukrainian army, the Russian army is getting their tail kicked. So maybe that's part of it. They're only really gaining ground or winning when they're bombing hospitals and apartment buildings. So I think we have to take a harsher stance. I'm kind of an aggressive guy. If I say what I really think, I'd probably be in trouble on Twitter. But I think that's the least we can do.
I'm interested in what you really think.
Good thing I'm not a general. I'm just a sergeant. If we'd be a little more aggressive if I were a general.
All right. U.S. intervention?
I would take on unoccupied areas at least, so that the potential line with NATO was closer to Moscow, just to make them nervous.
Interesting. So the discussion that's going on right now is NATO introducing a no-fly zone, right?
Yeah, that would help actually. I mean, I know the fright there. What makes people nervous is that U.S. pilots or NATO pilots could get into aerial combat with Soviet pilots. But I think if we did it at least in name, and we're prepared maybe to just skirt the fringes of the Ukraine, trying not to get engaged into some kind of combat. But if we said there was a no-fly zone over the Ukraine, I think it would make Moscow think twice. And in the meantime, we can get these Polish MiG-29s over to the Ukrainian Air Force where they can do some good and maybe fly support for them. I don't know. That's to appease the politicians. I mean, I'd probably be a little more aggressive, like I said, but to appease the politicians and to appease reality, maybe you go ahead and announce that there's a no-fly zone, and if you're really frightened, don't enforce it so much, but at least make them think twice every time they send a plane out there.
Thanks, Sarge. And to everyone in the audience, this isn't like a Russia-Ukraine space, but being that Sarge is a military guy, I did want to pick your brain. Just curious in how you'd approach the situation.
Yeah, I mean, you wouldn't. I mean, I sound like a war hawk if I speak, and I'm not a war hawk, but but I'm an older guy. The Russians have had put a burr under my saddle a long time ago. And I have no problem rooting for the Ukrainians. In fact, I was a little late for the space because I was going over to the Ukrainian church to bring them supplies. So, I'm an Irish American, but I have a side I'm rooting for in this war.
Awesome. Appreciate you sharing, Sarge, and
Sure.
Being candid with us. All right, TSDR, looks like we have you back.
Yes, I am back. I was having a little trouble with the space. I couldn't hear anything for a while.
Gotcha.
That's just on my end, probably with my internet. I'm not at the desk anymore, so I can't give specific picks. So I can just say, a lot of the names that I trade, a lot of these, growth tech stocks. I think we were started to talk about it with Nvidia and whatnot. They're getting pretty oversold again after that couple day bounce after Thursday, and then the consolidation most of last week before really turning over at the Thursday and Friday last week, and then again today. A lot of these stocks, Roku, Tesla, Nvidia, AMD, etc. They're already down 4 or 5 days in a row and really starting to speed up. looking forward to tomorrow, my tentative plan, if we get a significant gap down, tomorrow, already being down 4 days in a row, or, on a lot of these names, much like a few Thursdays ago, when Russia invaded Ukraine, and we saw that, big gap down leading into a rally intraday. If we get, something like that tomorrow or Wednesday, I'll probably be looking to bounce some of these names intraday, or at least for the open. At this point, after these moves have been made, over the past 3, 4, 5 days, it's getting fairly difficult to short intraday, and to make some day trades with really confident and really strong risk to reward. I'm sorry for my stuttering. But so from a day trader's perspective, for the next few days, where it's going to be a little bit of a tricky spot, depending on how we open the next few days, and I'll really be watching, and I'll be really conservative, I suppose, because, like I said, the days to really press your luck and to push the envelope to the short side on a lot of the stocks that I trade was these past couple days, and we'll see. I generally don't like really going big size on day 3, 4, or so on a lot of these moves, because the likelihood of significant follow through becomes less and less. I still agree with all the sentiment. I just think we probably need a nice big gap down. Let some people cover their shorts, and maybe take some profits, and which will be a good time for me to take some intraday long trades. And then maybe we go for a couple more days, and then I'll probably take it back short again once we get back to some levels. But that's tentatively my plan for the next couple days or so. Granted, if we open up flat tomorrow and we look weak right away, it's just going to be all systems go again, like it's been for the past 2 months, really for the whole year. So that's about what I've got. I do want to say, what Sarge just said about bringing some supplies over to the Ukrainian church in his area, that's super awesome. Sarge, I've got a lot of respect for not only your opinions when it comes to the market and the economy in general, but I've got just an enormous amount of respect for everything you've done and continue to do as a person. So I just want to say thank you on behalf of, I can confidently say, of all of us here listening.
Huh, thank you very much. It's nice.
Awesome, guys. Love it. So I think some earnings are coming out now. I don't see anything interesting, though. The only company I even really recognize it as earnings today is Rover. And I don't think anybody's trading Rover stock. I just know about them because I used to do a little bit of that. I mean, I guess LifeMD. Sarge, any earnings you're paying attention to, or not really? Or anybody care about any of the earnings today? Sarge or Big O or TSDR or Matt?
There's nothing
Not
today.
really.
It's pretty late today.
Yeah,
We
I
got.
don't care.
I don't have anything for this afternoon, but in the morning we got Dick's Sporting Goods, and in the afternoon we got MongoDB, Stitch Fix, and Bumble. Some people might care about that.
Yeah, MongoDB's been getting killed.
Yeah, I know. Holy smokes! I used to be in this name. Wow. I guess they're all like that now, right? I mean, geez.
Now, on say there's earnings, and it has a big move up or down regardless. What I like to do is I just go back in time, look at the daily, see how they performed the past. So, say it spiked up. I want to know, did it gap and go, or each time did it continue to sell off as soon as it opened up? So, I'm looking for how it reacted. So, I'm looking for patterns from the past, kind of like BBBY did this morning. So that's the only way I play earnings is, I want to try to play that gap down or gap and go on them.
Okay. Good idea. Yeah, something to play. Okay, so I don't think we'll dive too much in earnings. I guess, we can look ahead just to tomorrow real quick. Sarge, are you playing Dick's Sporting Goods at all?
No, I'm not. I maybe once the number comes out and we see what happens there. I am not. We are expecting, I think, decent numbers from them, though. They've done pretty well. They got sold off harsh today, ahead of the numbers, down $10 and change, 10%. So maybe somebody caught a whiff of something. But I think we're expecting some nice numbers. So maybe if the market's not out of whack in the morning, you never know. You might get a little pop there, but I'd rather see it before I act. So like this morning with the triple BY, I didn't have any position coming in, but when I saw it trading that high, I pretty much had to short it. And I don't like shorting names with, what is it, 20 something percent short interest. Once they get above 8 or 9%, I pretty much back off and don't short it. But that I thought was just stupid. So I shorted it. So, and that was my winner for the day. I was probably my best performer because my beloved defense names, though they were up, all came in a little bit from when we opened the show.
So we officially, I just saw the notification. Based on the close today, we've officially entered a bear market for the Nasdaq. Down 20% from November 19th record close.
Well, that makes my morning note correct this morning. I mean, it wasn't much of a stretch, though, given the situation.
Yep. Dow also confirms a correction, down 10% from January 4th record close. So correction and bear market entered, although the bear market seems to be getting shorter and shorter these days.
Yeah, they're not true bear markets. I mean, the terms bear market and correction have become distorted in the algorithmic electronic execution age. I mean, these definitions were defined when I was a younger fellow, and we traded everything by hand and we traded everything in person. So markets were slower. Now that markets are fast and electronic, and that algorithms are designed to cause overshoot in both directions, I think we got to come up with some new way to identify these markets. Like a bear market when I was young was a long drawn out thing where everybody just wanted to pull their hair out every day. And now it's like, hey, we had a bear market last Tuesday. I mean, it just doesn't make sense to me that we still call them bear markets. And I mean, maybe a correction still makes sense, but a bear market has to be, to me, something that lasts for a little while.
Yeah, it's definitely not exactly a long thing anymore. And that's the craziest part, Sarge. So you've been obviously trading for a while. It wouldn't surprise anybody if this market went up, 3, 4, 5% tomorrow, right?
Well, I mean, if you look back, I mean, this is strictly anecdotal. I mean, I'm not looking at any data right now, but most of the days where we have a really sharp move on a Monday, most of the weeks rather, we have a sharp move on Monday, whether it be up or down, and everyone either gets excited or really miserable on Monday. Often enough, the week ends up going the other way. So, I mean, what if Russia decides that they've had enough of this war and they back off somewhat? They take a softer stance by by later this week. The market will roar. Whether the fundamentals would support a roaring market or not, the market would roar on news like that. So, I mean, anything could happen, or something worse could happen. They could shell another nuclear plant, and the worst could happen. I mean, then there's no reason talking about the markets because the world has bigger problems. But I mean, so yeah, in this day and age, anything can happen from not only day to day but hour to hour. It's not like the old days where we could sit around and have a think tank and decide how we wanted to go about attacking these markets. You kind of got to have a plan. You got to have a plan ahead of time. You got to, even when you're trading an individual name, you got to know your levels. You got to know where you don't want to go, where you want to go. I mean, you always needed those things, but I just think trading in the old days, while it was fun and surely competitive because it was mano on mano, but in this day and age, I think it's a more challenging game. I really do. So I think you kids got stuck with a tougher market.
Yeah, definitely. It's a little bit crazy, and I don't know about, well, if we're stuck with it. Some of us, I see, see it as quite interesting. But
Yeah, I don't mean that. Some of you guys have really mastered it. I mean, it's listening to you guys speak. I think intellectually, I don't know, or maybe that's the right word, maybe it's the wrong word. I think just guessing by the tone of your voice, I think a lot of you guys are in your 20s, maybe sub 25 even, and I think you're ahead of where I was at that age. I really do.
Appreciate it. Yeah, I mean, we have so much access,
Yeah, it's true. Sure, you do have more. We had we were charting. We were using graph paper to make charts back in my day. I mean, it sounds ridiculous now. I mean, you'd wait till till Barron's on the weekend so you could see like charts in print.
Good old the star technical analysis.
Yeah,
You would have to draw the 200-day moving average.
Yeah, you were the nut job if you were looking at charts back then. Maybe not the nut job, but you were eccentric. You were a kook.
That's all.
And not as more technical analyst than fundamental guys.
Crazy times. Well, It's changed a lot. Okay, so for everybody that's been here with us for over an hour, one more time, you've been listening to Sarge and Matt, Big O, TSDR, Stock Market News, myself, I'm Wolf. And if you've enjoyed, we would love for you to join up on more of these. We do this every single Monday for Power Hour and a number of other spaces throughout the week as well. If you haven't already checked out this Bullish Rippers account, I do 2 spaces a week on here. Evan does a space a week on here, and he does a bunch of really good tweets. So it's a great spot for just finance news in general. We're trying to get this to 20K. And we're going to go around and just give everybody a minute for any closing comments and thoughts that they want to share. And then we'll wrap up probably around 4:30. So Big O, any closing thoughts or anything else you want to share?
Yeah, I say this. A lot of these tickers, especially the bigger names, I mean, they just had a big move the last week, including today. They're really extended. I think we see a consolidation from there. We can see the next push down. SPY, right there on that support. I know I keep saying this, but it's important. From here, we're either going to continue or we're going to see a bounce and it's going to push back up, start chopping again. Other than that, be careful. A lot of these tickers, there's a bunch of them that's been pushing up for the last week or so. Oils, Oxy, MOS, Kroger's, a lot of that stuff, same thing. They're extended as well. Everything needs a rest of consolidation. It's healthy for consolidation, right? So you want to see a rest for the next move, regardless if it continues or starts to reverse. So I would just be careful. And then the thing, too, is the market is super choppy as it is anyway. So the price can reverse 2 or 3 different times a day. So it's hard. If you think you're going to hold something all day, it just ain't going to happen. So make sure you place a hard stop on, and especially on, when the market is chopping, just go in with small size. If you have a larger account, 1%. If you have a smaller account, you really don't want to risk any more than 6 or 7% of your account. That's really being aggressive. But just reduce size. Know that you're not going to be in a move all day, more than likely. So take profits often on it, and don't have a bias. Because if you have a bias, you're going to be scared to take stops, or you're going to be scared to take profits or cut a loser. So don't be married to anything. And another thing is too, if you're a new trader and you've made money on the day, after 10:30, cut your screens off, walk away. Because there's a group of people. So there's a group of people after 10:30, and their entire job is to take that money back away from you. There's so many false breaks. A bunch of dirty stuff happens after lunchtime, and even sometimes you just have to be careful out there. I mean, and this market is crazy. Of course, we trended down today. That's a good thing, but it's not normal. So you just got to roll with the punches and make sure you have hard stops, and if something looks weird, cut it.
Sounds good. Appreciate you being on, Big O.
Yes, sir. You're welcome. I appreciate you having me.
Absolutely. All right, Matt, any closing thoughts?
Yes. Oh, here we go. When you're on your phone and you're buried in menus, and then you have to kind of back out like 5 or 6 times to get to the microphone button. We've all been there. Closing thoughts. Yes, take the market a day at a time. I think that it's going to be very hard to pick bottoms here. I think if we are officially turning into bear correction 20% territory, that I personally don't think the market crashes from here or falls 30, 40, 50%, but I don't think it's going to really easily recover either. So it's always in markets like this, the question is, when should I buy? And people know, in my life and family and friends all know I'm a trader. This is the time I get lots of phone calls from people I know who just said, "Oh yeah, Matt's a trader. Let me see what he thinks. Is this the right time to buy?" You always get a lot of friends, right, asking these kind of questions. And so when people, as a trader, I've kind of learned to gauge that kind of questioning coming away. Somebody messages me on Facebook, "Hey, we went to high school together. You're a trader, right? You have a question. Should I get into crypto right now?" That's usually when the market's done doing what it's doing. When maximum amount of panic is when that third cousin comes out of the woodwork and starts asking you if you need to buy GameStop. And so reality, I haven't really been getting a lot of those calls lately from people that have been like, should this the right time to buy or whatever? Or is this, should I sell out of my stuff, which is typically what your friends and family be asking now. Should I pull out of my 401k? So I think people haven't reached that max amount of fear yet to kind of, alert you. And it's actually, I know I saw TSDR putting up some hearts. He knows that's a real indicator. Once your grandma starts asking you when's the right time to buy Ethereum, it's the time to sell. So it's just kind of like where we are now. I haven't really been hearing a lot of buzz or friends or anything reaching out saying, should I put my 401k. I always tell them I can't give you investment advice. I always try to coach them, by asking them what they think. What do you think is going to happen? And why are you asking? And are you worried? And, because I try to gauge the sentiment of what people tell me around me to even gauge my own investment decisions. Because as a trader, you're supposed to understand the sentiment. And right now, the sentiment is that fear is starting to amp up. It's starting to grow little by little by little. And that's actually reflected in the VIX. We've seen the VIX climb little by little. I remember 2 Wednesdays ago, we were on there, me, Sarge, and Jay, and I think Jay brought it up that it's unusual as well for the VIX just to slowly climb higher and higher and higher without exploding, right? The market's just positioning for future volatility, which should be kind of the peak of the scare. And I know I was talking about last week that their market could flush last week. I think flush could still happen. Like some really nasty 2 or 3 day runs that really can clean out a lot of people's accounts. And I think those phone calls at that point will start rolling in. Is now the time to get out? And I really do think that the market might stabilize once it has a final burst of volatility. Big nasty couple day sell-offs. I really don't think we're going to sustain a bear market from this. Let me start over. Sustain a collapsing market from this. We're not really. I don't consider where we are at a bubble. But I do think we could sustain in this kind of ranged, maybe even flat market. So we could hit a wave where it goes back up for a couple months, despite everybody thinking that it's bad. But I don't think we've reached max panic yet. So as far as now being possibly sentiment-driven sell-off, you just have to kind of keep your ear to the ground, wake up every morning, and take your signals day after day, because it's going to take is one catalyst to take this choppy market back up a day or two. So be very careful. And that little speech I gave about maximum fear, it'll reflect itself in the VIX. You'll start to see that volatility will drive the boat. Typically at the end of a nasty sell-off, VIX just runs and spikes really hard for a day, maybe two. And I think that that's still coming. And at that point, I think the market could find an appetite for a bottom. So I don't think we're there yet. I don't think we're basing out yet. I don't think now is the time for me to start diversifying my portfolio into different equities positions. I just really want to kind of let it fall, see where it lands, and then jump in on the wave back up when it comes. But I think it's really easy to see right now that it's probably not going to happen anytime soon. There's too much risk on the tape. I mean, too much risk around the world, and we're not seeing people have that appetite. We're seeing higher volume day to day. A lot of these big mega caps and the indices as well, and that volume is going into selling. That is a clear as day indicator that people are even now starting to decide to get out of stocks. So you have to wait for them to decide to get back in before you start to see that reversal. So that's all I got. Thank you guys, and follow everybody here. This is an amazing panel. Love this show. Love these guys. Congrats on 10K TSDR, my man. So thank you guys for having me as always, and we'll see y'all in the morning.
Awesome, Mac. Great having you on. Appreciate you sharing all that and giving your insights and just being super transparent on these. And we'll get you to 10K next. All right, TSDR. Any closing thoughts?
Yeah. Everybody said, it's obviously, phenomenal information and their insights on the market. I'll just speak to a few things that I've been talking to some people about. I've had some newer traders really reach out to me, and I've been offering for about an hour-long phone calls with a lot of people in Stock Talk Weekly's Discord, and a lot of people have taken me up on that. So I've spent a lot of time on the phone really talking to newer traders, and I've noticed a very similar theme that's been coming up with them. People who are trying to make some shorter-term trades. And that the fact of the matter is they're going in without a plan. And I know it sounds cliche, or at least it sounds cliche to me because, it's, so crucial. But before you get into, a trade, whether it be, a day trade scalp off the 5-minute chart, a shorter day trade or, swing trade off the hourly, or, levels off the daily or weekly chart, you've got to have two specific things. First, a very precise entry, especially in this market. You've got to have a very precise entry, and you have to be diligent about that. Where I've been very, stubborn. I would call it stubborn about my entries lately, to where it's actually probably cost me some money, or at least cost me some less, profits on a lot of trades, because I've been so stubborn on, not chasing anything by even a penny. But more importantly, you have to know when and be able to identify when the trade is not working or it goes against you. And by that, I simply mean an exit plan if it goes against you, a stop loss. And then list your criteria. There's three very, very simple things that you can ask yourself. What's the setup? What's my ideal entry point, and what's my stop loss on the trade? Can I get? Is the juice worth the squeeze? Can I get upwards of 2-to-1 risk reward on that? And by 2-to-1 risk reward, I mean, can I risk $1 on the trade and make $2? Because then if you're trading at 50% success rate or even less, you're still breaking even or making money. Those things are very crucial. And when you become disciplined about asking yourself those three things: what's the setup, what's my ideal entry point, and what is my stop loss, you'll notice your success increase exponentially. And then lastly, thank you to everyone on here. A lot of you guys tweeted at me. I'm very grateful to have met you all, and formed some good friendships and relationships with everybody on here. I do have a cool announcement and a cool video that has been made commemorating my past 7 months with this TSDR account here. And I'm changing my logo. I got something cool coming, so I'll be tweeting that out in about 15 minutes, half an hour or so. And if you guys could like that and send it out, it's really cool, because I don't want people seeing a different logo and thinking I'm someone else or something. I'm still goofy me talking about the charts, blabbering on and on about this and that. Anyways, I appreciate you greatly, Wolf, Stock Market News, Matt, Sarge, Big O. Just met you. My mother's from Tennessee, so I love your accent. Anyways, I appreciate you all.
Hey, I was asking you, is the new thing the lobster? You know what I'm talking about.
It's not a lobster. I do have to make that account though, so we can all be sitting there together with our food accounts.
our brother's food accounts. It's not us.
There you go. Awesome stuff, TSDR. Great having you on. See you ready through 10.1. Steady moving. Good stuff. All right. Coming to you, Sarge.
Yeah. Oh man, I can't wait for that space where we have all got our food accounts.
It would actually be really funny. I think Gav and Evan and even Sarge, we need to kind of have everybody do it. It would be the funniest one we ever did. I think it'd be great.
It'll be a good time. Sarge, any closing thoughts from yourself?
Yeah, you know how I always say when the market gets jittery, you want to get skinny. You want to just focus on what you know, and I think that's what the market as a whole is doing to us right now. I mean, what's worked so far has been defense stocks, but even the subcontractors got hit today, and most of the large contractors came off their highs. As far as the oils go, which they were working for the most part all this time, today you saw the smaller U.S.-based producers sell off a bit. You saw Valero come in. Well, that's a refiner, but you saw CIVI come in. You saw Apache come in. You saw OxyPeat come in. You saw Pioneer come in. So yes, the Chevrons and the Exxons had a nice day, and the oil services stocks did well. But the smaller U.S. focused names, which should do better in this environment, are not actually doing as well. So I think the market itself is starting to shed some dead wood, and we'll see what happens tomorrow. But it's definitely a time to keep your helmet on, keep your flak jacket on, keep your gas mask on your hip, and stay ready.
Absolutely. Keeping an eye out. TSTR, looks like you got unmuted. Tried remuting him, but it's not letting me do it on my end. See if you can mute. Otherwise, I'll probably have to bump you off. All right. Stock market news. Coming to you. Are you able to give any closing thoughts, or are you busy? All right. My guess is that he is busy. I know that he's out moving into New York City today, so no worries. All right. I'll close this up. All right, everybody, this was awesome. We ran an hour and a half, as we typically do on Mondays for Power Hour. We went over a bunch of tickers that you can hear in this call. Oh, there he is, Stock Market News.
Yeah, that was my bad, dude. I was trying to find my phone, so I did the good old unplug the AirPods, see where the volume's coming out of, and go from there. But big shout out to all the speakers today. Love having you on here. Huge shout out to Sarge, TSDR, Matt, Big O, all the others we had on here. Fantastic panel. Big shout out to Gav. the Wolf account, the guy behind the Wolf account that's up here, for helping us put this on. A big shout out to Rippers for bringing us all together. I love doing these spaces. We got 2 more of these Ripper spaces this week, and 40 more from the Wolf account. So jam-packed week of content. Hopefully the market does a little better for us in the future. But yeah, big shout out to everyone.
Awesome. That'll do it for today. Thank you, everybody, for tuning in. Our next space is going to be at 7 p.m. EST, and that is going to be Asset Pitching with Asset Dash. And there is already a tweet out for that. It is on the Wolf page. I can go ahead and throw it up into the top of here real quick if anybody wants to set a reminder for that. But just a reminder, that is going to be 7 p.m. EST. I'm sure I put this out, but I'm not seeing it now, unfortunately. There it is. Okay. That is out. Power Hour, perfect. Or not Power Hour, 7 p.m. EST, stock, crypto, NFT pitching. We will see y'all there. It is pinned up into the top. I'll leave this open for another 10, 20 seconds so people can check that out, set a reminder, and then I'm going to go ahead and end it. Take care, everybody. See ya.